dream as big as you want, because it's going to take the same amount of time anyway. So if I'm going to be a contrarian and I'm going to charge that hill, probably going to go up the side route rather than have to walk through the front door.
Welcome to the Contrarian Capitalist Podcast, the ultimate destination for accredited investors and entrepreneurs seeking alternative wealth-building strategies. Discover how to fast-track your journey to wealth and time freedom by thinking outside the box. If you're ready to join the ranks of the Contrarian Capitalists and learn the most effective ways to reach your financial goals faster, you're in the right place. Let's get started with today's episode of the Contrarian Capitalist Podcast.
Thank you once again for listening to another episode of the Contrarian Capitalist Podcast. I'm your host and your favorite silverback, Sylvania Harrod. And on today's episode, I'm going to educate you a little bit about the world of fundraising. And my objective before the end of the conversation is that you understand is that all money is not the same shade of green. So like when it comes to a business, there's a couple different things that a business has to get to. If you're starting from like grassroots and being able to do things, well, you're doing it in a term that we call bootstrapping. So you're going to bootstrap, you're going to find different ways. Maybe you like saved up a little bit of money, you went and got an SBA loan and you're going through it. So you're in the development phase. You haven't hit stabilization. Like you're just like, all right, I'm in that development phase. There's lots of beauty in that phase that you go through that. But you get to a certain point where you develop the process. You have SOPs that are written. You start building momentum. And for some people, that journey is where they get off of the train. That's it. They're like, hey, we got it here. My family's good. Bills are paid. I don't have any more desire. That ends. Kudos to you. That's where you want to go on your stop. Because one of the things I'll tell you, my fellow contrarians, is that I'm not here to judge what your book is written to experience. I'm here to tell you like some of the different steps of the journey. But for some, they may get off on chapter 2 and be like, hey, I'm good. Homeostasis is this. I'm fine. I don't want to do anything else. Some of us are wired a little bit differently because the imagination is nothing more than a preview of what's life to come. So some of us have had this desire that like, I want to scale. I want to do more. And that's fine. But I'm also a firm believer, like, don't just do more just for the sake of doing more. Just because you can doesn't mean you should. But for those that really want to, do it. It's your desire. Go for it. So you go through that phase. And then at that moment in time, there's a couple things you're going to do. You're either going to go out and raise more capital, or you're going to take equity injections. So raising capital is the art of fundraising. Now, I'm here to tell you that small money is way harder than big money because small money has more competition. So if you think about it, for example, a deal came across my desk last week where a person was asking for just 50K. I also had the conversation right after that was 50 million. And so most people have created an inverse relationship when it comes to money because they look at money as an asset. While it really isn't. Money's more of a commodity. An asset is something that's precious, that's rare, that there's not a lot of it to be able to be there. But there is trillions of dollars that are traded every single day. JP Morgan moves $10 trillion worth of currency every single day. So based upon that equation, if there were trillions of diamonds all over the world that were being bought and sold every single day, then that really doesn't make it mean that it's that precious of an asset. It's not rare. It means that it's readily available. You can get it all over the place. That is a commodity. That's like I can go to the store and know more than likely it's going to be bread. Unless there's a storm coming there and maybe be low supply, which means it may cost a little bit more. But the reality is there's bread everywhere. Different things to be able to be there. It's not like there's one little corner of the world that has the only bread that's being produced right now. That's kind of my definition. So if that happens to be the case, then what must be true is that money is a commodity. It's everywhere. There's an abundance of it. There's just one person that's gonna be like, I'm gonna grab every single dollar that exists in the world and nobody's ever gonna be able to transact it ever again. So with that being said, money is a commodity, which means it's everywhere. So now think about it, the situation. If I'm asking a person for 50K and they only have $1 million, what I'm asking for is 5% of what they have sitting around. Now, if I'm asking somebody for 50 million, they need to be a person that has, for that same equation to be the same, they need to have at least $1 billion. Well, if you're asking a person that has at least $1 billion for that 50 million, it's the same thing. Well, most of the time when you go and raise from institutional investors, they have this thing called $1 trillion. So to make things the same, like that person that has $1 million, to be able to be in a comparison, that would be like asking them for 50 cents, maybe even smaller, maybe 5 cents. Do you understand the equation? It's like 5 cents. That's like 5 cents to them. So what really comes down to is what is the actual opportunity and what you're looking to build. So I know I'm sitting here just thinking about it like that really is like 5 cents to that same person. So you got to ask yourself, what's going to make you want to ask for 50K versus what's going to make you ask for 50 million? It's going to determine based upon the conversation between your ears. Belief is what's going to create the difference. Environment's going to create the difference. Relationships are going to create the difference. We are contrarians. We're not going to follow the same status quo. We're a rebel with a cause because we have an outcome that we want to get. And so if you're going to go ahead and raise money to be able to be there and you believe into what you have, well, you also have to justify it with the market. Does the market see that as an opportunity there? If you have all the proper data, then yeah, go build a security and go do things properly. Go through that because it's going to take the same amount of time anyway. So it's up to you to decide what is the actual outcome you want. Because if the outcome you want is just to like play it safe, barely get by, scoot through that, take no risk whatsoever, then cool, go raise the small money. Go do it. Family and friends, get them locked in, be able to do stuff, build another franchise if you want to. Go from there. Maybe go to like 3 or 4. Own a regional area. You're good. But those of us that realize like, hey, we're put on this earth to make massive impact. You got to learn the rules of the game. And that's why I will tell you, big money is way easier than small money. Because in that world, what happens is if I have $1 million and a person is asking me for 5 cents, do I have an inverse relationship with the asset they're looking for? No. I'm going to be like, all right, cool. What are you actually doing? What happens to be there? Because every investor has their buy box. So I'm like, real estate. So what you're doing, you have these kind of properties, you have everything's under contract, you have things there. All right, cool. Like, do you have your pro forma designed? All right, cool. Like, what are you expected results? Whatever. Have you done this previously? Yeah, you have. Okay, cool. Here's the money. There's other steps along the way, but you're only asking me for 5 cents. So if that happens to be there, I just want to make sure I get all the tax breaks for that period of time, and I'm good to go. That's why I'm here to tell you that like it's you're willing to roll the dice a little bit more to be able to be there because you're objective. You're like, hey, if it performs, because I have an investment thesis of what I have already. And as long as your outputs matches the inputs I say right there to be able to create the results I need, so I have consistent cash flow coming in, it's all gravy, baby. That's what truly matters. Everything has its level of due diligence, but it's less strenuous because you're not looking to raise like retail debt. Because as a bank is looking for retail debt, they're looking for those things. But investors, they're looking at possibilities. Because here's the thing, we know as an investor, there's always risk. There's always going to be risk. But how we can minimize the risk is betting on the right people. And the reality is that if you strike out twice out of 100 at bats, you're doing pretty good. But if your upside is going to cover your downside, and the downside just I got an extra write-off that year, and I'm going to keep going. If I start having a losing streak, I need to evaluate my thesis and what I'm looking at. But you, as the person that either is thinking about building a company or going through different things, I'm here to tell you, or even looking to invest. Make sure you have the proper orientation of the relationship of what you're doing, because everybody has their own asset class based upon your own individual investing style. I'm not a crypto person. That's okay. Doesn't mean that crypto is going to be bad and be able to do things. It just doesn't fit my investment thesis. I'm more of a real estate and business guy because I deal with today and humanity over time. There's always different trends and fads and things that come and go. But here's the thing that I know personally for myself. People are always going to need a place to live. We ain't building more land unless you Dubai. So they're always going to need a place to live, and people will naturally be ambitious in this country. So I'm going to bet in the culture of American people to want to build business and build companies and grow companies and scale companies. So those are my 2 bugaboos to be able to be there. You have to go through and figure out like what matches your profile and things to be there. Because the reality is that the only difference between your desires and what you want to do is the relationships you have and the talk between your ears. I believe that when the student is ready, the teacher will appear. That right person will be there. So even if you're watching this episode, you tune to this episode because this happens to be a place where you're having these similar thoughts. And that's pretty cool because I was in the same place, sat down, and went, this is what I want to do. This is what I want to be about. This is where I want to go. How am I going to do it? I have no idea, but I believe that God makes no mistakes. So I'm going to trust that piece. And then when the opportunity shows, I tune in my radio frequency to know, like, this is an opportunity for me to learn. And that's the amazing thing of life, that you have the opportunity to be a part of. So to land the plane, here's what I'm here to tell you, is that dream as big as you want, because it's going to take the same amount of time anyway. So if I'm going to be a contrarian and I'm going to charge that hill, probably going to go up the side route rather than have to walk through the front door. So as always, you can find me on all social media platforms. Well, not TikTok, because I don't do no TikToks right now. And who knows what's going to happen after October or after next month. But you can find me on most major platforms at Sylvania Harrod. I'm always welcome to DMs, to messages, to emails across the board. Let me know what questions you have. And as always, stay grateful, and I'll see you on the next episode.